Hey guys, it's Crossroads here. Today I wanted to talk about why the market is pulling back and really specifically why PayPal fell more aggressively than the market. When I began coming up with the idea of this, PayPal had fallen a little over 6%. Right now it's down 4-ish and some change, but it's still more aggressive than the broader market for a name that like PayPal that's not normally that volatile. You might be wondering why it's pulling back more aggressively. And so we're going to take a look. Now, the first thing I want to do is just note that sometimes individual names will pull back just because they're caught up in market-wide activity, and I think that's a lot of the case here. What's happening with PayPal? I think some people make the mistake of sometimes focusing so much and trying to figure out why the market's pulling back or why an individual name is pulling back. And if there's not a real clear reason, you can find, well, maybe it's this, maybe it's that, and just ascribe a reason. But correlation is not always causation. And I think that's the case here with PayPal. So, as far as the market pulling back, I think it was just a matter of time. The market had roared for so long. The RSI was very overheated. Things got a little bit extended. And it's not uncommon, especially around the first of the year after a very good year, to be able to take some gains because you don't have to pay taxes on those for over a year. So I was in that position. I know many people in the market were in that position as well. So it's not the most shocking thing that the market is pulling back. However, there are some real other reasons as well. Two this week were jobs reports, basically, with unemployment and also being down, which is a good thing, but the market interpreted it as making it less likely for there to be rate cuts. There is a fear that inflation will reaccelerate. We'll talk a little bit more about that. And of course, the non farm payrolls came out today with more than expected, quite a bit more than expected. I don't know whether to trust those numbers or not, but the one piece that I do trust is wage inflation looks like it is just kind of remaining the same, a little bit, about 4%. Which is healthy. We're not seeing inflation spike, at least there. Now, so why is PayPal dumping? Well, some might say that it has a lot to do with broader market issues, and that's certainly the case. One of those things is, of course, because of the strong jobs and labor market and because of some inflation fears, and some which is warranted and some which I don't think is. If we go all the way out to December 2025, this is CME FedWatch, we can see the rate probabilities continue to shift. So the current target rate is 425 to 450. And the highest probability is looking at one rate cut at this point versus right before we began this year, a lot of people were expecting three. In fact, three was the average. You can see the change here over the last week has certainly shifted. And over a month, it has shifted tremendously. Whereas before, you can see, yeah, the 375 to 400 was a primary rate. So I think that this is wrong. I think we're probably going to have at least two rate cuts this year, maybe three, but those are most, if not all of them, are going to be in the second half of the year. I think the Fed is prudent to kind of wait and see what policies are from President Trump and also see what inflationary pressures there are, because there are some. We don't want inflation to reaccelerate. Now, another big reason why the market is pulling back, and certainly PayPal is caught up in this, is the dollar index. The US dollar has been very strong, really, since COVID. When President Trump was first elected, he took some steps to deliberately weaken the dollar. I don't know if he will do that now. Some of the ways you weaken it, too, of course, are just printing a whole lot of it, but we don't want to see that. Hopefully we don't. You can see here, this is the DXY, the dollar index. So basically it's looking in aggregate how the dollar trades against a basket of currencies rather than just the yen or the yuan or something like that. So you can see that this is at its highest level in a year. And let's even look at 3 years. You can see it's not quite as high as it was at the peak of COVID, but it's not that far away. Now, a strong dollar sounds like a wonderful thing, and it is for some, but it's not a great thing, honestly, for a name like PayPal. This is probably one of the reasons why PayPal is pulling back a little bit more aggressively, although you would think some names that also have similar exposure would as well. Now, what's the issue here? PayPal will present their earnings, and they have done this at least since I've been tracking PayPal. They may have done this the last 10 years, but certainly since COVID, on a FXN, a dollar neutral basis. What this means is if that DXY was just even, was flat, it was neutral, the dollar wasn't going way, way up and other currencies weren't going way, way up, it's just flat, which has not been the case for a while. they're showing what their revenue would look like. And because a lot of their business comes from international markets, they have a large presence in Europe, for example, especially in Germany. That revenue that they get is now all of a sudden worth less because the dollar is so strong. Other companies that have a lot of international sales or have contracts that are tied not to the dollar rate, but instead to that currency, which is typical, they'll report a little bit softer numbers. And of course, they'll report their dollar neutral numbers as well. But the real numbers are what usually the market is concerned by. And so, yeah, that's not a great thing for PayPal earnings. It doesn't hurt them too terribly, but it certainly doesn't help. And it is a cause for PayPal to pull back a little bit, maybe not to the extent what they've done. Now, the other big factor, which is certainly impacting the markets, is the 10-year Treasury yield. This right here is, a safe percentage for investors. And so if investors think, hey, you know what, why don't I just take this number right here, which is guaranteed as long as the US government doesn't just implode or something, which it won't, at least not in the next 10 years. This number looks pretty attractive. Of course, it was down here in the 3.5s not too long ago, about 3 months ago. And since then, with one minor pullback here in December, it has just been off to the races. Let's look at over the 5 years. You can see over 5 years, it's actually very close to the peak, which is just a little under 5%. Back in 2023. So usually equities, stocks like PayPal pull back when the 10-year is roaring. It's not always the case, but there is a strong correlation to that. Now, so this one, though, is not PayPal specific. And honestly, another reason why that the market is pulling back is due to the fear of inflation resuming. Now, inflation itself and also the rate of the 10-year Treasury, they don't really have much to do with PayPal as a business. What do I mean by that? Well, PayPal gets most of their money through just a percentage cut based on the sell price of a certain item. And so they do have some flat fees and they have some earnings from different areas, but that's like 90, maybe 85% of their revenue is just tied to that percentage. So if inflation is off to the races again, which I hope it's not, and that would be a very bad thing, PayPal would be just fine because their take rate is based on a certain percent. In fact, it tends to be a good thing for names like PayPal. That's one of the reasons why they did very, very well during COVID, is all of a sudden they were just printing money because their revenue growth was artificially accelerated by that and a couple other things too, including the stimulus. So PayPal, doesn't really have anything to do with inflation. It's not a concern for PayPal as a whole, as long as recession doesn't loom and doesn't look like recession is looming. The jobs are doing very, very well, or at least the numbers look like it. And that's one of the reasons for the pullback today in the broader market, because right now the market is interpreting good news as bad news. Now, what about the 10-year Treasury yield? PayPal does have some cash on hand. They do generate some money from that. So this is a slight help to them. But overall, I think it's people maybe selling equities and buying 10-year Treasury. That does happen. There is that rotation in the market, and it'll rotate the other way when the 10-year does fall over time. But the biggest issue and the biggest scare, which I think is contributing to PayPal pulling back, but is certainly not the whole reason, is tariffs. If a strong dollar hurts PayPal a little bit, tariffs, I wouldn't say kills PayPal, but really, really does hurt them. The reason why is if President Trump initiates very aggressive tariffs with our largest trading partners, Mexico specifically, but also Canada, that may set off a tariff war. And as a result, a lot of the interchange and a lot of the international sales, the cross-border sales specifically for PayPal, now that volume will just be naturally reduced with the tariffs. And as a result, that's not a great thing for PayPal. So I don't know if the trade wars are going to happen or not. That's certainly been part of the headline as far as the tariffs. We'll just kind of have to see and monitor it. But that's really the one piece that the market is kind of understanding correctly, is that tariffs are not good as a whole for most U.S. companies, including something like PayPal, which of course relies on cross-border trade. It's their most lucrative brand. So in a nutshell, PayPal is pulling back largely just because it's in the market and the market is in a selling mood, partly, of course, because of the fear of tariffs, the fear of inflation resuming, Recession isn't really one of those fears right now, and really just because rate cuts look less probable, and of course the dollar continues to improve, and U.S. Treasury yields continue to improve, and so it's not a great thing for equities. Why is PayPal pulling back more than the market? Well, it shouldn't be. And so in times like this is what I do. If I know a name and I can find that there's no real reason for it to pull back more aggressively, I see that as an opportunity. Now, right now, most of my cash is deployed either fully invested in the market in long-term positions. I do have some swing positions that I'll look at getting out of on Monday. We'll have to see. It might be a week or two on those as well. And I have some more money coming in the market, but right now I have under 5,000 in cash, so I'm not deploying aggressively. I haven't bought the dip on PayPal yet, but if this dip lasts or if it goes down further, you can bet that I'll be buying that over the next couple of weeks. But anyway, thank you for watching, subscribing, and commenting. Let me know your thoughts in the comments. Is there something that I'm missing on PayPal? I appreciate you letting me know. And for now, happy investing.